Assalamualaikum everyone. Welcome back to our discussion on Murabahah financing. I was earlier saying that the setting up of Islamic Bank back in the 70s and 80s may not be accurate enough, or we may have false starting, in view of the fact that the modality adopted by our founding fathers are the deposit-taking bank modality. This deposit-taking model is not suitable to be applied for Albay system, because the Albay system is not a money lending system. It is a system where there is a transaction of real asset, because Albay is buy and sell. It is a trading activity involving exchange of goods for currency or for money, and therefore how Albay can be used as a financing arrangement depends a lot on the funding sources, depends a lot on how this financing arrangement to be funded. And the only funding modality available to Islamic Bank is through the deposit-taking modality. So meaning that the Islamic Bank were established as a highly leveraged bank, which means that the funding of the loan is entirely coming from deposits. So deposits are loanable fund. Deposits are loan that the bank acquire from the depositor. So we are looking at the bank who is not using their capital fund to make loan, but they are using the deposit fund to make loan. So I have to reiterate this many times, that the Islamic Bank is using the deposit-taking system to make murabahah, to make ijara, to make mudarabah, to make musyarakah. These are the real sector contract that is available in our Islamic tradition that can readily be applied. But then if the funding sources are coming from deposit, then it will essentially frustrate any attempt to use this traditional contract. Because these are risky contracts. This contract requires the bank to buy the asset and to sell the asset to the customer. This real sector contract requires the bank to go into real production, to convert inputs into output, and therefore the funding of such arrangement may not be coming from a debt fund or an IOU fund. It should be coming from an investment fund. But that has been the state of the affair for the past 40 years of Islamic banking, where the funding of the murabahah are coming from deposit, which means that the risk in deposit is now shifted to the bank who is the borrowing party, who borrow money from the depositor to make loan. And these loans are risky loan, and therefore any losses due to default will be absorbed by the bank. The depositor don't care less what will happen to the loan. They don't care less what kind of loan the bank is making, whether the loan is secured or unsecured, to whom the loan is awarded to. This is also the depositor don't care less, because their main concern is to redeem the loan at maturity in full, and also to receive the interest income in full. So the depositor do not take any risk in their placement. They will expect to see some form of deposit appreciation by way of a legal claim, by way of contract, and therefore they don't have any worry about what will happen to their deposit, because their deposits are guaranteed by contract, and therefore any losses in the loan will be carried by the bank. And this is where the Islamic bank are not able to sustain the Islamic banking business if they were to use Albay, because the nature of Albay is that it is inherently risky, and therefore the capital requirement accorded to a risky contract is very high, which the bank may not be able to use to sustain their business. So that is why many Islamic banks prefer not to do the buy and sell, or they prefer not to put the subject matter on the banking book, because this would mean higher capital requirement accorded to the position taken based on to sale. Okay, so we will further discuss this matter. How can we move from a deposit taking regime to an investment taking regime, so that Islamic bank will be able to apply the real sector contract that is made available in our Islamic tradition. Right, thank you. Please don't forget to share and to comment and to subscribe. I will see you again. Assalamu alaikum.